Hello everyone, welcome to the market opening bell for Tuesday 24th March, your 10-minute guide to the stock market. Tensions in the Middle East escalated, triggering circuit breakers in the early sessions of the Japanese and Korean markets on Monday. Hong Kong stocks opened lower in line with the weak external environment. The Hang Seng Index opened down 488 points or 1.9% at 24,789 points. It later extended losses to 1,073 points, hitting an 8-month low of 24,203 points and closed down 894 points or 3.5% at 24,382 points, marking the third consecutive trading day of declines. Cumulative drop of 1,642 points or 6.3%. The Hang Seng China Enterprises Index fell to 266 points or 3.1% to close at 8,307 points. The Hang Seng Tech Index dropped 159 points or 3.3% to close at 4,712 points. Total market turnover for the day reached 368.6 billion Hong Kong dollars. Southbound trading turnover totaled $167.638 billion, while southbound funds recorded a net inflow of $29.728 billion, the fourth highest net inflow on record. Among the flows, southbound funds net bought tracker fund for $13.27 billion, the CSOP Hang Seng Tech ETF for $6.533 billion, the Hang Seng China Enterprises ETF for $4.843 billion, Xiaomi for $1.216 billion, Tencent for $793 million, BYD for $726 million, Yangtze Optical Fiber and Cable for $587 million, Popmart for $358 million, and Sinopec for $179 million. The only notable net sale was SMIC for $516 million. Statistics show that southbound funds have net sold SMIC for 7 consecutive days, totaling $2.962 billion, while net buying Tencent for 3 consecutive days, totaling $2.103 billion. The 3 major A-share indexes opened lower and continued to fall, with losses widening in the afternoon to more than 4% each before closing. The Shanghai Composite Index fell 143 points or 3.6% to close at 3,813 points. The Shenzhen Component Index dropped 520 points or 3.8% to 13,345 points. The Chinex Index declined 116 points or 3.5% to 3,235 points. Combined turnover in Shanghai and Shenzhen reached 24.4 trillion yuan. The Beijing Stock Exchange 50 and Star Market Composite Indexes closed down 5.5% and 4.9% respectively. The renminbi central parity rate against the US dollar was lowered by 143 pips to 6.9041 per dollar. Hong Kong listed auto stocks bucked the downtrend. Geely Automobile rose 2.5% against the market. Recent international developments have pushed oil prices higher, according to terminal surveys by the China Passenger Car Association. Higher oil prices have increased vehicle usage costs and heightened hesitation among fuel vehicle buyers. Institutions believe this is likely to accelerate the recovery of new energy vehicle orders and sales. Geely's full-year results show revenue of 345.2 billion yuan, up 25% year-on-year and a record high. Core net profit attributable to shareholders reached 14.41 billion yuan, up 36%, with profit growth outpacing revenue growth and demonstrating high-quality expansion. Chery Automobile saw 2025 revenue break through 300 billion yuan for the first time, with net profit growing over 36% year-on-year. Overseas business and new energy segments serve as the core growth engines. In addition, BYD is scheduled to announce its results on 28 March 2026. Alibaba closed down 3.2% at $119.7. Reports indicate that Alibaba's DAMO Academy may release a major chip product today, directly targeting the surging demand for AI agent computing power this year. Public information shows that DAMO Academy will hold its annual 226 XuanTie RISC-V Ecosystem Conference in Shanghai today. Last year's event unveiled the industry's first server-grade RISC-V CPU. Mainland media reported that the Beijing Municipal Market Supervision Bureau, together with the Municipal Commerce Bureau and the Municipal Culture and Tourism Bureau, conducted regulatory interviews and administrative guidance with 12 platform companies, including Ctrip, Qunar, Gaode, JD.com, Taobao Flash Sale, Meituan, Flijie, Tongcheng Travel, Tujia Homestay, Xiaozhu Homestay, Douyin, and Kuaishou. The authorities issued a collective notice on the first batch of issues identified during the comprehensive rectification of involution-style competition on platforms and set out rectification requirements. Tongcheng and Ctrip fell 4.2% and 3.75% respectively. Henderson Land announced full-year results at the end of December last year. Revenue reached 25.741 billion Hong Kong dollars, up 1.9% year-on-year. Net profit was 5.653 billion dollars, down 10.2%. Earnings per share were $1.17. A final dividend of $0.76 per share was declared versus $1.3 last year. Total dividends for the year amounted to $1.26 per share, a 30% reduction from the previous year. The group cited uncertainties arising from the Middle East situation and adopted a prudent financial approach by cutting the final dividend. Underlying profit for the period was $6.063 billion, down 38%. Underlying earnings per share were $1.25. The decline in underlying profit was mainly due to the previous year's one-off gains totaling approximately $4.768 billion from government land resumption in the new territories and the disposal of controlling interest in the North Point Harbour East project, compared with only $599 million this year. Last year, fair value losses on completed and under development investment properties after revaluation totaled 410 million Hong Kong dollars, an 88.2% reduction from $3.478 billion in 2024. The net gearing ratio was maintained at a healthy 18.7%. The group expects approximately 10.4 billion Hong Kong dollars in unrecognized sales to be recognized upon project completion in 2026 and plans to launch 8 new projects offering around 4,700 residential units. It owns substantial agricultural land reserves and is expected to benefit from the development dividend of the Northern Metropolis. Tingyi announced full-year results to the end of December last year, with strong net profit growth continuing the earnings improvement trend seen in 2024. Revenue for the period was 79.068 billion yuan, down 2% year-on-year. By segment, instant noodle revenue was 28.421 billion yuan, up slightly, while beverage revenue declined 2.9%. Net profit reached 4.501 billion yuan, up 20.5%. Earnings per share were 0.7986 yuan. Total dividends amounted to 0.7984 yuan per share, comprising a final dividend of 0.3992 yuan and a special dividend of 0.3992 yuan. Previous year's combined final and special dividend was 0.6628 yuan. EBITDA rose 10.2% to 10.607 billion yuan. gross profit increased 3.1% to 27.532 billion yuan, with gross margin improving 1.7 percentage points to 34.8%. Laopu Gold will hold its 2025 annual results briefing this morning at 10 a.m. The company released preliminary financial estimates for the first quarter, ending 31st March 2026, expecting tax-inclusive sales of approximately 19 to 20 billion yuan, revenue of 16.5 to 17.5 billion yuan, and net profit of 3.6 to 3.8 billion yuan. Two new stocks will be listed today. Galaxy Technology, stock code 2729, closed at 30.42 Hong Kong dollars in yesterday's Philip Mart grey market trading, 82.6% or $13.76 above the IPO price. Excluding fees, each bought lot of 200 shares yielded a notional profit of $2,752. New Vision Automotive Electronics, stock code 2632, closed at $44.66 in grey market trading, 1% above the offer price of $44.20, excluding fees. Each bought lot of 50 shares yielded a notional profit of $23. U.S. President Trump stated on Monday that negotiations between the United States and Iran are progressing smoothly. The U.S. will suspend a tax on Iranian power plants and energy infrastructure for 5 days. U.S. stocks staged a sharp rebound, with the fear gauge VIX index falling 0.6 points or 2.4% to 26.2. The Dow Jones Industrial Average surged more than 1,000 points at one stage and closed 631 points or 1.4% higher at 46,208 points. The S&P 500 index rose 74 points or 1.2% to 6,581 points. The Nasdaq Composite gained 299 points or 1.4% to close at 21,946 points. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, advanced 57 points or 0.9% to 6,800 points. Hang Seng Index futures once rose 881 points, reaching a high of 25,228 points and closed at 25,020 points, up 673 points. The Hang Seng Index broke below its 250-day moving average at 25,108 points yesterday, leaving a wide 332-point downside gap on the daily chart between 25,121 points and 24,789 points. Today is expected to fill this gap and attempt to reclaim the 250-day line. If it fails to hold above the 250-day average, the move would merely be a technical pullback following the breach. On the U.S. stock market, cyclical sectors such as industrials and banks led the surge. Morgan Stanley and JP Morgan Chase rose 1% to 2%, while construction equipment maker Caterpillar jumped 3%. Technology stocks also rebounded. Nvidia gained more than 1%, and Apple announced that WWDC 26 will be held on 8th June, sending its shares up over 1% as well. With oil prices plunging sharply, May New York crude futures closed down 10% at $88.1 per barrel. May Brent crude fell 11% to $99.9 per barrel. Airline stocks rose on the back of lower fuel costs, with Delta Airlines up 2% and United Airlines up 4%. As the Iran conflict de-escalated, gold came under heavy selling pressure. Spot gold dropped $85 or 1.9% to $4,407.2 per ounce. April gold futures plunged $165 or 3.6% to $4,409 per ounce. Our stock pick today is Softcare, stock code 2698. Softcare has been selling hygiene products in the West Africa region since 2009. Its product range covers infant care items such as baby diapers, female care items such as sanitary napkins, and family care items such as wet wipes. It has since continuously expanded its business to multiple African countries. Its sales footprint now covers more than 30 African countries across West Africa, East Africa, and Central Africa. Leveraging its operational experience and success in Africa, the group expanded its business to Peru in Latin America in 2020. In 2024, it further expanded successively to Kazakhstan in Central Asia and El Salvador in Latin America. Benefiting from lower market penetration rates and substantial demographic dividends, the African hygiene products market continued to record growth, outperforming the global average in 2025. The Latin American region maintained a low growth trend, but domestic consumption remained the primary economic engine. The market in the region combines African-style channel characteristics with the consumption structure of mature markets. This is favorable for the group to replicate its successful channel experience while launching high-cost performance product portfolios adapted to local consumption patterns, enabling rapid market entry and penetration. In infant care, the group offers baby diapers and baby pull-up pants in various sizes, designs, and functions specifically designed for newborns to 5-year-old children. It actively promotes a one country, one policy approach, developing customized, targeted products centered on market needs. In 2025, the number of SKUs for infant care products sold by the group reached 437. In female care, the group offers sanitary napkins in multiple designs and specifications. In 2025, the total number of SKUs for female care products on sale stood at 57. In family care, the group provides mild formula wet wipes for daily cleaning and disinfection that are suitable for use on infant skin. In 2025, this category covered a total of 23 SKUs. For the year ended 31st December 2025, the group achieved total revenue of $567 million, representing a 24.9% year-on-year increase, primarily driven by synergistic growth in sales volume and average selling price. On the sales volume front, the group benefited from sustained population growth in emerging markets, rising urbanization levels, and increasing health awareness, which drove continuous improvement in hygiene product penetration rates. At the same time, the group strategically established factories in multiple African countries to export products to neighboring markets and actively expanded into the Latin American market, further boosting volume growth. On the average selling price front, ASP across categories rose 4% to 7%, mainly due to the strengthening of local currencies against the US dollars in most operating regions in the second half of 2025, combined with the group's multi-dimensional adaptive pricing strategy formulated according to its diversified product matrix, varying consumption capabilities across countries and competitive landscapes. Net profit reached $121 million, up 27.4%. Gross margin improved from 35.2% in 2024 to 35.9% in 2025, primarily due to the combined effects of deeper penetration in emerging markets, upgrades and iterations of existing products, and product mix optimization. Looking ahead, the group will continue to strengthen its core operating model of localized production plus global supply chain plus deep distribution. It will keep optimizing production capacity layouts in key regions such as Africa, Latin America, and Central Asia, advance upgrades to intelligent production lines and quality control systems, and further consolidate its leading position in the hygiene product sector in emerging markets. Recommended buying price $29, target price $31.5, stop loss $27.5. I do not hold the above stock.